and get into the presentation, and I'm getting ahead of myself because I'm pretty excited about it. It's the third one done today, so I can kind of go off the script sometimes. Program summary. Our down payment assistance program is eligible for residents throughout California. There is no guidelines. There are census tract guidelines for some programs. Other ones are county-based. This is from the top. From El Centro to Eureka, you're good to go. This program could enable you to purchase a property valued up to $1 million. Now, I'm not motivating people to spend $1 million. That's a broad statement. You have to look at your county loan limits, okay? And make sure that it fits within the county loan limits for the subject product. It's amazing what can happen. It has a fully forgivable second. The second mortgage will be forgiven after the 6th payment. So essentially, when you buy a house, you always collect interest in advance. The first month, hooray, no payment. Please advise your clients that after like the 7th month, they'll be eligible to have 100% of the DPA program forgivable. It's amazing. It goes away. The next bonus is the DPA program allows for 100% of the closing costs to be covered by the home seller or home buyers. As we've seen a shift in the marketplace, the last about 9 to 12 months, it went from a very, very different market. Sellers were not giving anything. They were really, it was an aggressive market in their favor. We've seen that the tides shifted very dramatically. Now home builders are offering amazing incentives in pre-existing homes. Traditional home sellers are now looking at closing cost concessions as a normal tool to get their house sold. This can be absolutely awesome if you build it into the net sheet, where the client can receive the amount of money they want, regardless of the closing cost concession they give the client. Our borrower is a win-win for both parties. If they can hit their net number, our clients get the property 100% down payment covered by a grant, and 100% closing costs covered by a closing cost concession that doesn't eat into their proposed net earnings. It's a win for both parties. Here's the really cool thing. Any borrower on the loan applicant that is current, retired, volunteer, or non-paid employee will qualify. See below for listed job profiles. Here's an example, right? This is where the program's absolutely amazing. Our company has a vision called the Badges Broker. Our mantras are proudest for those who serve and keep our community safe. That's why this product kind of came our way. If you're in the military, first responder, police officer, firefighter, public safety officer, paramedic, if you are a public service in general, you qualify. Educators, we've always had a teacher program. But the problem, if you're not a teacher, then what happens? If you're in the education from a teacher to the janitor, you qualify. It said there's no more doctor's loan. If you work in the medical profession, from the doctor to the janitor working at a facility, x-ray tech, you can work at a daycare and fall under this profession, you qualify. Civil servants in a federal, state, or local municipality. So here in Northern California, we're close to an Air Force base called Travis Air Force Base. This really kind of brings it kind of to heart. If you are working with, the U.S. government, you're not enlisted, you're not eligible for VA benefits, but every day you show up to work at an Air Force base, or you're down in San Diego working at the base down there, but you're not enlisted, you can use this because you're a civil servant. If you work for a city, you're a dispatcher, you're not a police officer, but you're a civil servant working for the police department, you qualify. It's amazing, the parameters. It's very broad, as you can see. It's really cool because there's really 4 guidelines for this product. This is the overarching one. If you're under these professions, you automatically qualify for our program. Here's an example. I think I missed a slide. There it is. Bar eligibility. To be eligible for the program, you must meet only one of the 4 categories to qualify. First, a home buyer. The standard rule Fannie and Freddie have set up 3 years, you're first a home buyer again. That hasn't changed. The caveat is, if you are currently retired, employed, non-paid member, you qualify by default. So you could have owned a home 9 months ago, sold it, you're not 3 years out from your last home, and re-qualify for this program. It can be the day after you qualify for this program because you are an officer, first responder, or fall under one of these special categories. If you don't fall in one of these categories and you are not technically first a home buyer, then you default to the other 2. The income limit of 140% of the county's AMI, area median index. If you don't fall for that, we have the underserved census tracts. That's pretty broad, but give us information. The trick is about 95% of all potential home buyers will fall under the default first-time home buyer or by the job profession. It's amazing what we can do. Okay, sorry, everybody. Here's an example we did. $600,000 purchase price. Let's start the traditional FHA. Financing without DPA and closing cost credits. $600,000 purchase price, down payment is 3.5%, estimate $21,000 down payment. Closing costs. We're using a scenario when the client is going to do borrower paid compensation. Therefore, title, escrow, all third-party fees, and origination fees all included. The estimate of the $25,106.30. Cumulative together, that's $46,000 and change. A lot of money if you do the traditional route with no help for closing costs and no help for the down payment. With the program, same thing, $600,000, same down payment, doesn't change, 3.5%, but typically 100% of the funds required to be covered. Closing costs. Let's say that we engage the realtors on this call. You guys really provide an awesome experience. You negotiate with the selling agent and you give these amazing home buyers a credit. Let's say 100% of the closing costs, 80% of closing costs, some large number to cover it. This scenario plays out for you. Out of the closing costs, the seller closing costs are covered by that. The total closing costs required at closing is zero. It's zero for the base of the down payment closing costs to be covered. This does not constitute I really stress they do a voluntary home inspection, and every area is different. $350 to $700 is our average inspection. Please make sure they do an inspection to make sure the property is sound and safe for them to buy for them and their families. And then you have the traditional, you have the appraisal. Really pay with a credit card. The appraisal, voluntary home inspection, that's it if you use this program. Eligible programs, this is where it can get really cool. It's FHA based, but if you notice, limited and standard, the 2 or 3K program. So you can do a traditional purchase. You can find that amazing home, your first home buyer or your buyer that is a 2 or 3K eligible. You get them in a property. Maybe it's that property that has had a hard time moving because it's not totally the most desirable property in the neighborhood. You get them in that property, do the 2 or 3K program. They're able to get the property up to par with that general contractor's bid, turn all in at once, and you hand them an amazing property that they're going to love to get that opportunity to home ownership, and maybe something in a neighborhood where they couldn't afford to put the $40,000, $50,000 in themselves to fix a property. But by doing the 2 or 3K, you finance that into the property, and it's a win-win. Parameters, this work is pretty cool. You have GSFA Platinum and CalHalf are the kind of the two most prominent DPA programs here, I think, California. They have raised their credit limit to 680. They've kept theirs at 620. That's a huge difference. There's a lot of people that can barely almost to 680 to the 640, 660 range. And, possibly they would love to be a homeowner, but they're not there. 620, you qualify. 30-year fix only. This is only for purchases. Owner occ, LTV is all standard. 3.5% down, maximum CLTV is 96.5. DTI is a 48.99. So right now, CalHalf and others are at 50. They're not there. They're at 48.99. The difference of that is minuscule. Property types, this is where you can get really creative. 1 to 2 unit primary residences. Okay. This product is for first home buyers to get Californians into home ownership during these times. Now, on a 1 to 2 unit, you can get them in the property. They could rent out the other property, and you put them into a first home buyer situation with income producing possibilities. It's a win. Manufactured housing, really good. This has kind of been brought into the fold to really kind of expand the opportunities for housing. So single wide, multi-wide, and condo projects are available. They have to be condo approved. That's a stipulation. Here's a contact information. Hopefully it held true. It's 12:15. I wanted to kind of take just like 15 minutes of your time I don't know if we have any comments in this section, but if you guys want to reach out to us via email, or you can go online to our socials, give us a DM, a comment, or message